I'm gonna start off by just saying who you are and stuff like that. Yeah, so we are actually live.
Hello.
So yeah, welcome to my Fact Friday. Like I said, I do this every Friday. I just try to bring folks information on the real estate world, different people. I'm actually gonna do a little bit more this year, even a little bit more than real estate, just do it kind of holistically. But today I'm with Jonathan Stroud, and he is a mortgage broker with Lending Hand, right? Get it right? Lending Hand Mortgage.
Yeah, Lendingham Mortgage.
Yeah. So Jonathan, tell me a little bit about yourself, man. How long you been doing this, and what's going on?
Yeah, so my name is Jonathan Stroud. I live in Nashville, Tennessee. Um, I'm at Keno because I do a lot of business in Memphis there, and pretty active around the whole state of Tennessee and into some of the other states, connecting states. So pretty much the whole South we service. I've been in. So my official title is I'm a loan originator for the number one mortgage broker in the state of Tennessee, which is Lending Hand Mortgage. We are a correspondent lender as well, so a little bit different than a mortgage broker. We do both. We do correspondent and broker loans. So correspondent means that we will actually hold the loan for a short amount of time, but then other mortgage companies will service these loans. Um, yeah, I've been in business about 6 years now. So help a lot of people. It's really changed my life. I think I found my calling in the business. Just happy to help people get in homes every day.
Yeah, that's what we do, man. Try to help people with the American dream of home ownership.
For sure.
Yeah, put them in the best position to own their home. Not only own it, but by the grace of God, stay in it until they're ready to leave. Making
Right.
yeah. So on South Coast, we know there's brokers, there's banks. So what would be the basic difference between, say, someone coming to Lending Hand Mortgage versus going to a bank, just a regular bank to get a mortgage?
Okay, so there's actually three different types. There's a bank, and then there's retail lenders, but a bank can be considered a retail lender too. And then there's a mortgage broker, like Lending Hand. So the difference is a bank has their products, right? A retail lender, like the Rocket Mortgage of the world, they have their products, right? The Lending Hand, we can broker loans through pretty much any wholesale lender in America. Okay, so if there's a product out there that a wholesale lender in America is offering, we can sign up to be a partner with them and use those products. So we use probably consistently about 20 different lending partners. Um, but yeah, so it just gives you more flexibility, more programs, better pricing because we're going to price. When I get a loan, I'm going to price it with 10 different companies. I'm not just going to price it with one company. So if you go to a bank, they're going to price it with themselves. So I can price with other lenders who give us wholesale rates. So typically we're going to be on par or beat most any retail lender out there.
Okay, so basically, from your point of view, you do a lot of partnerships with just about different institutions that can help you provide more for your clients.
Right, right. And we don't hold loans. Everything is serviced. See, banks and retail lenders, they service their own loans. We don't service any loans. So you're going to start with us, and then the company that underwrites the loan is the wholesale lender. They're the servicer, so they make all decisions on the loan as well. So, but it does give your clients more opportunities, though. It gives your clients more opportunities to have a better look at not just one lender. We can look at 20 lenders when you send them to me.
Okay.
So, yeah.
Okay. So what are some of the been in the business for, you said 6-7 years now? What are some of the biggest mortgage myth you hear from buyers now, and how it could be costing people money right now today?
I think a lot of people are thinking the market is going to crash. It's one thing. Have you been hearing that, Keno? I don't
Oh
know if
yeah,
people think the
definitely.
market's
Everybody
crashing
talking about
and they're scared.
yeah, yeah, absolutely.
I mean, obviously, it could crash at some point. I mean, but what is that going to happen, right? So, um, if you can afford a house, I would pull the trigger now because what happened after COVID? What happened when when there was a significant event in the world? the price of houses skyrocketed. So if you own a house before COVID, you're sitting pretty good right now. There's a lot of equity in your house. So there's a big problem with the cost of waiting. You wait too long, it's going to cost you more in the long run. So just think if a house is 200,000 now, next year that same house may be 220,000. So you might with the interest rates might come down a little bit, but you also gave away $20,000 if you think of it that way. Right, combined with the amount of money you're paying in rent, $20,000 combined with let's just make it 24,000. Say it's 24,000. So that's 2,000 a month you're giving away. Okay, then you're also paying say $2,000 a month in rent. So you just basically gave $48,000 away last year. If your house appreciated that much, if the house that you were looking at appreciated that much, so think about it like that. So,
okay, yeah, a lot of people try to see if they can time the market, but I hope if they do, they let me know so that I can know when to exactly what I want to sell, because
we control what we can control, right?
Yeah, we can. Trying to time the market, like so. For example, we hear first it was prices were too high, right? Then we heard interest rates were too high. Now, I ran into a guy there that he said he's waiting for prices to come down. And I'm like, dude, real estate prices don't come down. There was an event back in 2008 where that did happen, but that was the first time in God knows how long. And the natural thing is that prices might slow down, but it's not coming down.
Yeah, especially your market. In the if you want to compare markets, compare the Memphis market to the Nashville market, it's night and day. So the Memphis market, there are so many opportunities for affordable housing. There's so many more cheap houses out there that it's crazy. So even if you're an investor, now's the time to pull the trigger on something because these houses aren't going to stay this cheap.
No,
they're going to go up at some point. So Memphis is coming back. I think Memphis is coming back. So if Memphis comes back harder, these companies, if they start moving into the area, these prices are going to skyrocket. So now if you want to get in, now's the time.
Yep. And the people who buy now are the ones who are going to benefit the most.
Right.
So, one of the things sometimes we hear from people that they've heard from in the past is that they need 20% down. What's the truth behind that, and where did that all come from with the 20%?
Well, 20% down was typical on a conventional loan in the past. The only reason to put 20% down now is to have a lower monthly payment, or if you want to eliminate private mortgage insurance, PMI. But no, you don't have to put 20% down. Even on a conventional loan, if you're a first-time home buyer, or if you're in a certain tax bracket, as far as income, you only have to put 3% down as far as conventional. But even if you're buying a home, you're selling your home and buying another home, you still only got to put 5% down conventional. Now there are other opportunities, FHA, you don't have to put 3.5% down. And then there's plenty of down payment assistance programs out there. We don't have to put anything down. So if you qualify for those programs, there are programs out there with second liens on them, second mortgages that help you with the down payment assistance. And there's also grants out there. It just depends what you qualify for, but they're all great products and they all get you into a home and they're all able to refinance in the future. Even if the rate isn't where you exactly want to be, they're all able to refinance in the future. So my advice for you is if you can make that payment work, you need to get yourself in a house. So now's the time. Because another thing is now's the time because it's about to be spring and the market's about to heat up. Do you think so, Kino? I think it is.
Absolutely. I think, it's cold right now. I mean, a lot of time, most things that happen outside, generally in winter, it slows down. I mean, that's just a natural thing about people, especially I'll say in the South, a little cold and but no, I think the market is definitely going to heat up come spring. And the thing about it that people don't realize is they can't build homes fast enough to make up for the lack of supply right now.
Right.
So if there's a low supply, and then I heard this, and you can probably help me with this a little bit more. I heard that for every 1 point that interest rate drop, like 5 million more people come into the market. But it's not going to be 5 million more houses. So all it's going to do is shoot up home prices.
Yeah. People follow trends. So if their brother Larry's buying a house, they want to buy a house too. It's just their cousin bought a house, their coworker bought a house. So it's time. So people hear what they want to hear and they try to be like keep up with the Joneses kind of thing. Yeah, I believe that too. And now I believe now is a good time. What is the time right now? The early in the winter. Well, this time in the winter, everyone's starting getting their income tax checks, right?
Mm-hmm.
So I give, even if with down payment assistance, now if you can't even get the whole down payment assistance, you have a little bit extra cash right now. So that's why I think it's a great time to buy. But it's also other people are thinking that too. It's gonna be a great time to buy. So now is the time if you're even on the fence, you need to get in the market before spring and get yourself looking for houses if it's your time.
Yeah, a little bit off of that. So my next question is, obviously, to buy a house, if you don't have the cash to pay it, then you got to finance it. To finance it, you need credit. So how much does credit score actually matter when buying a house?
Yeah, it's huge. So it's an integral part of the home purchase. So the things that we look at, the FHA looks at, Fannie Mae, Freddie Mac, USDA, VA, all the programs look at is there's several different things, but credit score is one of the key factors. So credit score, your income, your assets, how much money you have, your work history, how long you've been on the job, your work history, and so those are the key parts of buying a house that you have to get qualified for. So, but credit is huge. So you typically, if you're looking at credit scores, now FHA will go down to as low as 580, but there's a good chance you won't get approved. It depends what's causing that 580 score. Okay, right. We can actually do loans below 580 into the 500 mark, but you have to have at least a 10% down payment. Most people don't have that. So if you're working on your credit, I would at least be shooting for a 640 credit score. 640 opens up a lot of doors to down payment assistance and programs like that. So you typically need at least a 640 to get into most down payment assistance programs. There are exceptions to that, but it makes it much tougher.
Okay. What are some very, very minor things that buyers can do if their score is not high enough that might be able to help get their scores up pretty quickly?
Yeah. Well, biggest thing that moves credit is credit cards. So if you have a high balance on credit cards, pay those down. What I've always been trained is to pay that card down, but don't pay it all the way off. Leave a $10 balance on it and use that card once a month. But don't spend more than maybe $100 on that card and then pay it back to 10. Continue to do that, and you continue to grow your credit. It shows your ability to borrow money and pay it back. Borrow money and pay it back. It's like a guy playing baseball who has a batting average. Every time you get a hit, your average goes up. Every time you get a late on a mortgage, every time you get a late on a credit card payment, or you get a late on an installment loan, you get a strikeout if you're a baseball player. So make sure you keep getting base hits, and that credit continue to jump. But those are the paying your credit cards down. If you have any medical collections, you can get those deleted if you settle. So any medical collection has a zero balance has to be deleted from your credit report. And sometimes you can get collections deleted too. You have to contact the creditor about that and see if they'll remove them. If you can't, I would suggest getting a hold of a credit repair specialist. Maybe they can help you. Another way is to become an authorized user on someone's credit card. So maybe one of your parents or your uncle or whoever, it can be anybody actually, but the formula for that is you want that credit to have a pretty good history. You want it to have a high limit, but a very low balance. You don't want to increase your debts as far as on your debt to income ratio. So those are a few things.
Okay, cool. Yeah, because a lot of times people, they say my scores are too low, and you just kind of explain to them, hey, there's a few things you can do. The problem usually is they don't want to spend the time. They think it should happen overnight. It took them a long time to get where they are, but they wanted to turn around overnight instead of gradually doing it piece by piece to get it back up.
Yeah, it's a little bit of work. I see people fix their credit all the time, though. If you get the right credit repair specialist, and I'm sure Keno has probably somebody if you can contact him about, and he'll get you in touch. I have some people too that can help you with that. And I'm happy to look at anybody's credit anytime and see if it's something I see. But if it's too much, I'll refer it to a credit repair specialist.
Okay, cool. So usually, like we talked a while ago, when people, the thing that gets the headline is the interest rates. Mm-hmm. But what should buyers be paying attention to besides the interest rate when choosing a loan?
So first of all, I don't even care about interest rates, right? When I'm talking to a borrower, I don't even First, one of the first things we talk about, you don't be too concerned about interest rate. The most thing we should be concerned about is how much your monthly payment is and how much you can afford. So I always ask, what is the maximum amount that you think you can afford to pay and be comfortable? So, and then I will base that on their house price. And some people are living under a rock, and they'll say $800 or $500, which is impossible. But we have to. I mean, I have to curb people's expectations because some people have no clue. So you have to kind of just dumb it down for them a little bit and explain it all to them as best you can. But yeah, the rates are that's something we can't control. So I see the rate sheet and I quote what the rate is, and I talk to my clients about it, and I tell them, hey, in the future we could possibly refi. They have gotten better though. I mean, government loans we're locking those in the 5s now, and conventional loans are in the low 6s. So we were in the 7s and 6s now. Right. We were in the 7s and 6s. Now we're in the 6s and 5s. So we are in a better place. And some stuff might be coming. They actually, what I'm hearing is maybe a new Fed chairman. Heard that on the news today. So that might help rates here in the future. So I don't know. I don't really get into politics like that, but I do see there's some stuff going. At least they're talking about it, trying to find a way to get these rates down. Okay. So, but my like I said, I would say more worry about your monthly payment. What is the amount that you can afford to pay monthly? So,
yeah. Based on what you just said, the people that are really, really sitting good are the people who buy when rates were really high and prices were really good. Yeah. Because there weren't a lot of people in the market, but they took the find the house that fit their budget and bought it. Now, what's going to happen when rates go down? They're going to refinance their homes, and then they're going to be dropping their payment $200, $300, maybe $400 a month. And the people who are just now coming in because rates are lower, then you're going to pay more price.
Right. That's why they say date the rate, right? And buy the home and date the rate. Marry the home and date the rate, because you're not going to be with that rate the whole life of your loan. A lot of things change. Rates go up, rates go down. You might need equity out of that house at some point. The values go up or down. So, like I said, the biggest thing to me is just finding an affordability. It's affordability. Mm-hmm. So find something that you can afford. So that's when you need a great real estate agent to find you that perfect house and to get you into the right position. Because there are still deals out there.
Absolutely.
So, sometimes you might not get sometimes you might not get exactly what you want in a house, but you can change things in a house. You just can't change the location. So you can add an extra bedroom down the line. You can remodel that kitchen, whatever, if it's the price that you want. So there's ways to do that as well.
Yeah, absolutely. So let's say if a buyer is watching this and is on the fence right now, what's the one step you think they can take maybe this week, this month, to get clarity so they can lock themselves into making the next step towards home ownership?
Well, the fence, I would say right now we're still in a buyer's market. We're getting closer to being in an even level market between a buyer and a seller's market. I think we're still in a buyer's market with the rates high.
Right.
And the reason I would say that's why I think it's the time to buy, because we're still in a buyer's market. And the biggest thing is people don't realize that have never bought a home. There's your down payment. There's also closing costs. Closing costs can sometimes be more than the down payment.
Yeah.
So, and that's when sellers can pay for those costs for you. When you're in a buyer's market, you can negotiate that. You can negotiate those closing costs. That's why I think it's still the best time, especially for first-time home buyers, to buy, is to get those closing costs covered by the seller, get you possibly down payment assistance or very low down payment, and get you into a house. And there's people out there sitting on a 401k too. And that's a great opportunity to buy a home too. You've invested your time in this company. There's a lot of people that work for FedEx and companies like that in the Memphis area. And a lot of people have these big 401ks with 40, 50, 60, 100,000 in them. Use 10,000 of that and get yourself a house. It's actually a better deal for you if you take that out than it is to get down payment assistance in some cases, because you're going to get a better interest rate if you don't use the down payment assistance.
Right.
And think about that. It's just all you're doing is taking that investment and putting it into another investment, because actually a house is going to appreciate faster than your 401k. So if you have a 401k, that's a great opportunity. Don't be afraid to take that out and buy yourself a house, because the amount of money you're throwing away, like we talked about earlier, the amount of money you're throwing away on rent, you still weigh $40,000 last year You don't even realize it. So pull that money out.
Yeah, I totally agree with you because sometimes people just be scared to do that kind of stuff. You've been working all your life, and that's what the money is there for, is for retirement. And buying a
Right.
home is also could be part of your retirement plan, you know?
But think about it. How long is $10,000 going to last you in retirement? Not even a whole year, right? You got to blow through that money in 6 months, right?
Yeah.
But you might have a house the rest of your life. That $10,000 is nothing, right? To blow it through, you really are going to blow through that really quickly in retirement. So something to think about. So I had this discussion with a lot of my clients that are on the fence too, and we're trying to find a way to get them the best deal. And I talked to you have a 401k, so it's a great opportunity, especially these people that have been working for a long time and don't have anything to show for it. So
Okay. So, being in Nashville and in Memphis, what are this totally off the topic? What are some of the biggest differences between the Nashville market and say the Memphis market from what you see?
it really is affordability in Nashville. That's why I love coming to Memphis. That's why I love doing business there. I can get more people in houses. I can get, one of my favorite things to do is get a single mom in a house. It's very rewarding to see a mom that works 2 jobs and has her kids in baseball and basketball, whatever it is, and then help them get in a house. Here, a single mom is almost impossible to buy a house right now. You have to have 2 incomes to get a house. So a FedEx worker in Memphis can buy a house. A FedEx worker in Nashville cannot buy a house by themselves. It's the average house price is pushing 400,000 here now. So you might get something 350, but you're not gonna get the 350 house is the $200,000 house there. It's a big difference. Yeah. So you get a decent house for 200,000. You get a brand new house for $300,000. That house, that $300,000 house in Memphis is $500,000 here, $550. It's a big difference. So
Big difference.
Yeah. But it's affordability. But Memphis has its problems, and it's well publicated. But I really think it's a great city, and I think it's even you get into Mississippi too. There's great neighborhoods and great schools in Mississippi. So there's still a great opportunity to buy there. But yeah, it's just really affordability.
Yeah, we have a really, really good market here in Memphis, the surrounding areas, northern Mississippi, where people can truly own homes because the prices are really good. Like something that I do whenever I travel these days is when I'm in a certain neighborhood or depending on the neighborhood, I will look up the prices of homes and then kind of in my mind say, okay, this home here, what would it compare to in Memphis? And it's amazing, man. It's amazing. The prices in Memphis, home in Memphis is so much more affordable that people need to just get on this because they're not going to always be like that. They're not going to always be like that. They're going to go up. People need to just get on the thing. But first, they got to learn this. They got to be able to buy what they can afford, not what they really think they want to buy. Buy what you can afford, get in, then you can take that home, sell it later on down the road, and move up to the bigger home. I usually put it this way, and I'll let you finish up. Even the NBA stars, when they get their first contract, the home they buy is not the biggest home they're gonna buy. They're gonna sell that one and buy another one as they keep going forward. So that's what I try to get people to understand.
Yeah, starter homes. Starter homes are key. You might not get your dream home in your first home.
No,
they'll get you into something. Build some equity, grow. That's the easiest way to grow wealth. Rich people don't rent. Think about that. Rich people own homes, and they started there, and their parents owned. And so, if you want to end that cycle, you really got to buy a home. So it's just the easiest way to invest in yourself and invest in your family.
Yeah, man.
So
if you have anything else you want to just let folks know that's going on in your business, also if you got any your contact information that folks can reach out to you.
Got you. Yeah, happy to help anybody. We have a lot of great programs for down payment assistance for investors. A lot of people investing there. Our company our process is very smooth. Our average clear to close on most of our loans is less than 12 business days. So it's really, really smooth process. I bet on myself. So I'm really easy to get a hold of. Call me anytime. I'm available to you on the weekends, whatever. Just call me. Happy to discuss your options. Happy to get you pre-approved, get you over to Keno. Let's get you a house.
Absolutely, man. And yeah, just reach out to me. I'll definitely get you in touch with Jonathan as well. Can get you his link, get you his phone number, get you his pre-approval links. So yeah, but again, get in the game, folks. In the end, you'll feel good about it.
And just look me up on Facebook or whatever too. You can find me. I'm easy. You Google my name. I'm right there. So really easy to find.
So on social media, it's just your name, Jonathan Stroud. That's
you'll see this bald head on there right when you log in. You'll see.
I got one of those too.
But I want to say it's been a pleasure talking to you, Keno. It's always a pleasure. I do so much business there. Memphis is my second home. The people there. What I like about Memphis is what Nashville used to be. I mean, Nashville has all the people from Memphis see all these great things happening in Nashville, but they also need to remember we've lost that small town, that home feel, and you guys still have that. We have all these transplants here. We don't even have people here never even came from here, so it's I felt like coming there too. It's home. People make you feel at home when you come there, and they're very accepting. I love that place.
Yeah, I've lived in many different places in the United States, and I tell you, Memphis is gonna be my home. We got issues, but I love Memphis. I definitely love Memphis. I've lived in Memphis longer than I've ever lived anywhere in my life.
People are very proud, and I also learned that people are very proud there of their city. So that's why I'm pushed. I really wanted to come back hard, and it's gonna be it's a great place, but it's gonna be better in the future. Just need the right people to come in and invest in that city. Hopefully, it's in the future. So right corporations come in and get better jobs, and that's where it starts. But home ownership is part of that. So you investing in the city is part of that as well. We don't need everybody renting there. We need people investing in their city.
Yep. And the more people buy homes, the more they take care of their neighborhood. So buy a home in your neighborhood goes up.
You own a piece. You own a piece of that. When you own a piece of a city, you're more invested in that city. When you rent, you're not as invested. But when you own, you really are invested in that city.
You're absolutely correct. Man, Jonathan, thank you so much, man. And next time you're in Memphis, let me know. We'll go pick up lunch or something.
Yes, sir. Anytime. Call me anytime, brother.
Hey, man. Appreciate you, man. Thank you.
All right. See you. Bye.
All right. Bye. Hey, so that was Jonathan Stroud. And if you need any information more on Jonathan, submit application to see what you can get qualified for. He have a lot of different programs. Like I said, he's a broker, so he partnered with many different lenders throughout the country that can help you get approved. Most people, again, they talk about interest rate, but then they'll go to the car dealership and they won't bother about the interest rate. Just say, if you can make my payment, this I'll buy it. Same thing as a house. See what you can afford. Find a home. Put it this way. Find a home that fits you and your family's needs, that fits in your budget, and buy the home. Get in the home. If rates are high, fine. The natural progression is that at some point they're gonna go down. So once they go down, you can refinance, have a better payment. But again, thank you guys very much for tuning in. If you heard this, appreciate you guys. I said I'm gonna try and make this holistic. So next week, I have an idea of somebody I want to talk to. Hopefully I can, but I'll have another episode on Friday at 4:00 Central Time is when we come on. Try to be about 20-30 minutes max. Not a big long conversation. Just quick, relevant information for you guys. Hey, it is still dangerous out there here in the South, here in Memphis. Be careful. Enjoy your weekend. And I'll see you guys next Friday. Bye-bye.